Okay, so I guess the cat is now out of the bag. What Zillow released on the 18th of October, that press release was trash. Okay, you could probably put this down to misleading investors because the reason that they gave for pausing Zillow offers is total trash. Okay, so this is what we were told. Let me refresh your memory. They said that due to a backlog in renovations and operational capacity constraints, Zillow announced its Zillow Offers business will not sign any new additional contracts to buy homes through the end of the year. And the reason for this was because they were operating within a labor and supply constrained economy. Garbage. And the earnings call pretty much just shuts this excuse down. This is not the reason why they had to pause it. This was a complete lie. And they go on to say that we have not been exempt from these market and capacity issues, and we now have an operational backlog for renovations and closings. Pausing new contracts will enable us to focus on sellers already under contract with us and our current home inventory. But if you look deep into the reasons why they gave, I mean, the labor supply shortage, it was only earlier this year that since March 2020, they had increased their employees by over 1,500. And, they strengthened their workforce by roughly 28%. Now, ironically enough, 25% of these people are getting cut now. Okay, so they're cutting 25% of the workforce that they recently just hired this year since March 2020. That's out the window. They're all going to lose their jobs now. Okay, so the company said it's cutting 25% of its workforce and eliminating the unit. So that's the Zillow Offers unit. So not only have you recently just hired these people, you're already cutting them. You're cutting them loose. This is a sign of managerial incompetence, in my opinion. But let's find out the real reasons why Zillow are now scrapping their Zillow Offers, because the answer is clear, cut and dry in the Q&A session of the Q3 earnings call. And I mean, the analysts, they were brutal. They kept on banging on Zillow Offers. We want more color. Can you shed more light? Can you break it down for us? And I thought it was a great Q&A session, to be honest. So Brad asked a great question. He says, but I think people really want to understand just the mechanics, maybe a bit better, of what went wrong here, okay? Particularly in the bidding. And the CEO probably backed up into a corner, just pretty much said it like this. Fundamentally, we have been unable to predict future pricing of homes to a level of accuracy that makes this a safe business to be in. So they messed up with their pricing algorithms, okay? They messed up. But if you refer back to their press release on the 18th of October, that's not what you said. You put it down to a labor and supply constraints in an economy in a competitive real estate market. That's what you told investors on the 18th of October. But now in the earnings call, you're saying, look, our pricing predictions messed up. That's not good. That is not good. He said we hadn't modeled this kind of pricing market nor supply market to even be possible when we got the business going. We've seen all this volatility in both directions, right now in the wrong direction, and we are still at a scale that is small compared to what it needs to be. And another analyst called Ryan actually grilled them even further. He says, I just want to clarify what you're saying about the overall kind of macro home price environment. So most of the measures that are out there of CoreLogic, Case Shiller, or any of the home price indices, generally it seems to be an environment where the price is still going up, albeit at a much slower pace than what had been happening. And that's a fact, because if you just take a look at the United States new home sales, you can see as of 2020, we had this huge spike in home sales. And yes, you can say from 2021, prices have been on a decline, but they're still much higher than they were pretty much pre-2020. But it's no lower than it was in 2019, 2018, and 2017. And in fact, as of the last report, it's actually spiked up even more. If you're getting your pricing models and your pricing algorithms messed up already, are you telling investors that you failed to backtest your pricing model or pricing algorithm pre-2020? Because if you did, and if you run your models against 2019 numbers, 2018 numbers, 2017 numbers, you would still be fine. You would still be fine. And I think by this point in the Q&A session, Rich had pretty much had enough, and he said it was pretty much forecasting volatility. But then Alan stepped in and gave us some more clarity. He said, look, we made a decision that we needed to increase our acquisition pace. So they rushed, okay? They saw the likes of Opendoor, they saw the likes of OfferPad taking up market share, and Zillow was like, hold on, we need to move now. and they rushed. Okay, this was a decision where they were focused on the competition and they wanted to be the market leaders in this iBuying industry, and as a result they increased their acquisition pace, and it's proven to be a fatal error. And we and our models, our forecasting process I should say, at the time was not keeping up with the rapid rate of HPA increase that was occurring. And as we went into the second half of the year, HPA still continues to increase, and we believe that there's still a strong market, but the rate of increase declined significantly. Again, going back to the United States home sales, yes, there was a rapid decline, but again, nothing that was pre-2020. So again, I refer back to the point that if they just back tested their pricing model pre-2020, they should still be okay. They should still be fine, but they messed up. So there was this volatility that Rich talked about that was way outside of the normal distribution you would expect. And that's where I think our pricing forecasting accuracy was less than we had expected. Come on, guys. He goes on to say that the volatility was higher. I can talk more about a write down, but the assets are valuable. Market's still strong, but we ended up with that volatility agreeing to prices that are going to be higher than what we expect to sell those houses for less selling costs. They screwed up. They didn't do enough due diligence. They didn't backtest their pricing model and their algorithms pre-2020 numbers. And this was what went wrong. They did not do their due diligence. They were in a hurry. They were in a rush. They said they needed to increase the acquisition pace. And because of that managerial decision to rush, they made clear mistakes. And as a result, the stock is getting absolutely destroyed today. So as I'm currently recording this video, Zillow is down 23% on the day. My goodness, it's down 23% on the day. Its market cap is now sub 20 billion. This decision by the CEO and by management to rush the acquisition pace is absolutely bleeding shareholders dry. And the fact that they were not honest from the beginning. This press release gave false hope because you mentioned that you were pausing it, when in actual fact, you were planning to just pretty much scrap it. And as a result, shareholders now are getting absolutely destroyed. And I think the CEO, Richard Barton, really needs to do some soul searching. This is poor. Meanwhile, there was a press release from Opendoor where they said the US PropTech Opendoor plots Canadian hiring expansion, aims to add 100 engineers. So Opendoor are thriving to the point where they're now considering expansion into Canada. Fantastic. OfferPad also announced that they are expanding quicker. And the reason why these companies are able to do this is because they are operating at a much better margins than Zillow currently are. Because if you take a look at this spreadsheet that I shared with my Discord members, Zillow were operating at margins of 4%. Opendoor were operating at margins of 5.53%, and OfferPad had the best margins here, operating at 10.68%. So as a response to this, Opendoor actually made a tweet. Okay, let me quickly show you the tweet. So this is what Opendoor tweeted last night, and I shared it with my Discord. They said, "We are in the midst of a generational shift towards a fully digital experience with a large unmet need for a seamless experience in real estate. With our track record of executional excellence and many years of investment in consumer experience, technology, pricing, and operations, we are well positioned to meet consumer demand with a best-in-class product and service." Okay, and they went on to say that Opendoor is open for business. We have demonstrated strong growth and unit economics, and we are energized to help homeowners nationwide move with simplicity, certainty, and speed. And I said, exceptional timing of this tweet and wonderful reassurance for open shareholders. I am more optimistic and bullish than I've ever been. Bravo. Okay, Zillow's management absolutely messed up. Okay, and this is a poor effort and a poor showing from the CEO and also his management team. Personally, I have zero interest in investing in Zillow as long as Richard Barton remains the CEO, and I'm not entirely sure whether Wall Street will be forgiving of Richard Barton while he's still the CEO of Zillow. So those are my quick thoughts regarding Zillow. I am even more bullish on Opendoor because we have less competition, less incompetent competition to deal with, and I mean that just leaves room for us to scoop up even more market share. And I'm now more bullish on Opendoor than I've ever been. So I hope that sheds some light. I think if you're a Zillow shareholder, you really need to review whether the fundamentals of the company that you've invested in has changed. In my opinion, I think it has. I think the fundamentals have changed drastically, especially if you invested in Zillow because of Zillow Offers. Review your position. I wish you guys all the best. And I'm glad that I chose Opendoor. Thank you so much for watching. I hope you gained some value. If you do want to join my Discord group, the Patreon link is in the description below. Thank you so much for watching, and I'll catch you in the next one. Peace.